Welcome to another episode of Equity Mates, Tuesday here in the AusBiz studio, and my name is Bryce, and as always joined by my equity buddy Ren. How are you going?
I'm very good, Bryce. Tight intro as always.
Always, yeah.
Yeah, it is Tuesday, it's earnings season, there's a lot going on in the markets, way too much for us to keep up with, but luckily today we're joined by an expert who always has his finger on the pulse.
Always.
Yeah.
Serious finger on the pulse, which is why we've got Henry Jennings from Marcus Today joining us on AusBiz. Henry, welcome.
Hi guys.
How are you going?
I'm going fine. How are you boys going?
Can't complain. We're happy that we've got you here. We're happy that we've got you here to talk all things reporting season because, as Alex said, there is a lot going on. But we have a particular focus today, and that is on, as you've coined it, the Holy Trinity, being the massive dividends that we're seeing paid out and the buybacks that are happening, and a couple of companies around that. So that's going to be the focus today, and you appropriately named this episode Tip Sheet Tuesday. So we'll finish with a few stocks in particular. So for those that are unaware on what we're exactly talking about here, let's start at the top. What do you mean by the Holy Trinity when it comes to what is going on at the moment?
Well, guys, I guess you can say the Holy Trinity is what shareholders are really looking for this reporting season. And we saw it really yesterday with Suncorp results. And the Holy Trinity is that increase in dividends, a special dividend, and to cap it all off is an on-market buyback. And we saw that yesterday from Suncorp, which had an ordinary dividend, a final dividend of 40 cents, a special of 8 cents, and then just to top it off, to put the icing on the cake and light the candle and then not even blow it out, an on-market buyback of 250 million bucks. And the stock was up 7.6 or something % yesterday. So it did pretty well. And that's, I guess, is what the market is being held up for. And to some extent, it's been a bit like, you guys are too young to remember Muhammad Ali and Joe Frazier and the golden years of heavyweight boxing, when it was the rope-a-dope, and the market is being held up a bit like Ali used to take to the ropes and be held up while he took all this punishment. And every day we see, COVID cases in Sydney and elsewhere in the country and worldwide increasing, but the market shrugs it off. And some people scratch their heads and go, what, why? And one of the reasons why is the reporting season is on us, and it's all about dividends. It's all about that Holy Trinity for shareholders. And the fact that it's being held up now, what happens after it remains to be seen. Ali took a lot of punishment on the ropes and then came back and won. So it's going to be interesting, but it's all about dividends, that Holy Trinity of shareholder benefits and company largesse this season, that's for sure.
Yeah, now Henry, there's one company that comes to mind when we think dividends, one that broke the record for the biggest dividend payout, but we'll get to that in a second because I want to stick on this Holy Trinity concept for a moment. You mentioned Suncorp has delivered the Holy Trinity for shareholders. Are there any other companies that have delivered it so far, or are there any that you're expecting to deliver it this reporting season?
Well, I guess the resource stocks generally, and I think BHP and Fortescue will be at the forefront. And given what we've seen from Rio, and you sort of hinted at that recently, they paid $9.1 billion in dividends. It's extraordinary the amount of money they paid. An interim dividend of $5.61. So it was massive. Special dividend there as well. So we are expecting big things, I guess, from BHP and Fortescue. BHP coming up on the 17th of August, so not for a little while. And Fortescue right at the back end of reporting season. And Twiggy's set to get around $4 billion in dividends for himself, which is pretty interesting. I'd love to see him do his tax return with his fully franked dividends there. But so those are the ones, I guess, and those are the ones that will probably want to outdo Rio. The only thing that could temper their enthusiasm could be the fact that the iron ore price has pretty much tanked in the last few weeks. It's gone from 220 to 170, and everyone's been quite sanguine about this big fall. It is a big fall, a $50 fall in the price of iron ore. That puts a dent in your profits. The only thing that people have been sanguine about is no one really believed the $2.20, I think it's fair to say, or 220 rather, it's fair to say, and none of the brokers had that in their estimates, and a lot of people were still going for around 170, 180. I think the government still got in $57 a tonne for iron ore, which is pretty stupid. It's a bit like the vaccination forecasts. So I suspect that the disappointment that we've seen from corporates, BHP and Fortescue, with that iron ore price falling, may temper their enthusiasm a little bit, and Rio may have sort of got to peak cycle in terms of dividends, and we may get a little bit of disappointment with BHP and Fortescue holding something back given that fall in the iron ore price recently.
Yeah, the Rio result was incredible. $9.1 billion, only just beat their $9 billion last year, I believe. But I was reading some analysis that said at the peak of the iron ore price, Rio were making about $100 a tonne net profit, which is just pretty incredible. BHP, Fortescue, Rio all benefit from this iron ore boom, I guess, this resource super cycle, whatever you want to call it. If you had to pick one of the three to put on your watch list, Henry, which of the big three would you be putting on there?
I think I'd look at BHP for a number of reasons. One, I think it's got its mojo back, and they haven't had the same issues that Rio has with management stuff-ups in terms of blowing up heritage sites, which is never good. And they haven't had the problems that Rio's had in Mongolia. BHP also now is the lowest cost iron ore producer, something that Fortescue once held that mantle. They were the gold medal, if you like, in the lowest production cost, but now it's BHP. The other thing about BHP, of course, is that it has that diversification, it has that copper exposure. It's also got an optionality on potash, which is going to be interesting. It has just lined up a deal with Tesla in terms of its nickel production. And of course, it's got those oil and gas assets, which it is looking to sell. And if it does sell those, then there is a potential then for shareholders to get some sort of capital return from that as well. So there's a lot of things to like about BHP. Rio, I think, is still in a state of flux. Fortescue does tend to be, it's a very focused company, which has been fantastic, and they have done a brilliant job in being just focused on digging up dirt and sending it to China. They've done a great job, and that would probably come in as my number two. But it does mean that you've got all your eggs in the iron ore basket. I know Twiggy's trying to go green, and he's suddenly embraced climate change and wants to jump on that bandwagon to some extent, which is fantastic. But I think BHP, with that optionality over potash, the nickel side, the copper side, the iron ore business, coupled that with the fact they're trying to get out of oil and gas, and that could be returned to shareholders in some form, I think BHP for me is the standout.
So you mentioned there, Henry, that BHP's got its mojo back. Another stock that you mentioned that might have its mojo back as well is Telstra. So where they haven't reported yet, where are they sitting when it comes to the Holy Trinity, do you think? And what do you mean by they've got their mojo back?
What Telstra I always call the tech stock in a cardi, because Andy Penn, as hard as he tries to look cool and adopt the sort of the US tech look with the Zuckerbergs and the Jeff Bezos, etc., he kind of doesn't quite pull it off as a tech stock. But we do have the Telstra figures. They're coming up on Thursday. They already do pay a special dividend to some extent because they're returning part of the NBN copper wire proceeds to shareholders. But the yield is still very good. They're starting to do some interesting deals. They announced a deal on Monday for a medical company, which they're buying for $350 million. They're pushing heavily into, I guess you could call it med tech, if you like. We are all still stuck at home and we're consuming data like there's no tomorrow, I would imagine, from our internet plans and upgrading where we can. So Telstra, to me, it's got a very defensive quality. It's got a good yield. I think Andy Penn is starting to get on top of things. There's the separation of the company, which has been interesting, and that sale of the towers, which also gave the the company a bit of a catalyst for a re-rating. And I think we're at close to a 12-month high in Telstra, depending on what it is when this goes to air. But for me, it's a company that it's quietly achieving, and it's quietly got its mojo back. I don't think Telstra ever had a particularly big mojo, to be honest. But the small mojo that it did have, I think it's got slightly more than it had, even at its peak. So for me, that one looks interesting. Defensive, good yield, the towers being sold, the move into medtech, and the defensive qualities of the fact that it is very much a domestically focused business. So I quite like Telstra. The results on Thursday, I think consensus for the dividends around 11 cents, NPAT around 1.61 billion for that one for FY21.
And so, Henry, just to sort of close out, for investors who have just started and hearing you talking about this Holy Trinity and thinking that increased dividends is amazing, special dividends off on-market buybacks, etc., and looking at the companies that are doing it, how do you think about this going forward? Like, what are the expectations for the market? Is this something that would continue? How do you think about this? Just if you're not to get sucked into it, I guess.
Well, yeah, it's interesting, isn't it? Because there is a tendency to get sucked into this, and there is a tendency to be like Ali on the ropes and play the rope-a-dope, and you don't want to sell because you're waiting for these big dividends to drop. Now, the danger, of course, is that once they do announce them and they do come out, or they go ex-dividend, that then the benefit of owning these shares really does go quite quickly in some cases, and then you've got to spend the next 6 months waiting for the next big dividend, and people do move on. So the fact that they're paying these big dividends, we'll see a big reset when they go ex-dividend. The question is where they go from there. And I guess, one of the watchwords we've seen in the last year or so has been unprecedented. These are unprecedented times for some resource companies. We've never seen the iron ore price as strong as it has been for so long, at least until recently. So for some of these resource companies, this could be as good as it gets. So I think investors need to be not blinded by the dividends, not blinded by the upcoming record payments and capital management that we could see, because they will go ex-dividend, and it's really what they do after that. It's, I've invested in shares. There's one I could name which, has a massive dividend payout. It's virtually 100%. All its profits are paid out to shareholders. So every year it has a little run up and it pays out its dividend, announces a record dividend, and it's just like a capital return, and the share price just goes nowhere for the next 6 months. So I think people have to be just a little bit careful that they don't get sucked into the I must keep these for the dividends at all costs, because remember, at the end of the day, they will go ex-dividend, and when they go ex-dividend, they drop by $3-4 or whatever it's going to be, and then it's where do they go from there, and the impetus and the reasons to hold that stock could then get slightly less importance from investors, and we could see some of these come off, and where you're getting yield and return in terms of dividends, you may be giving it up in terms of capital gain. So just, I think, be a little bit careful, especially for new investors, especially when there's such big numbers that are being trotted out, $3-4 coming off a share price in the next dividend. Why would you own it then? I mean, you've got to look through the dividend cycle, I think, to some extent.
Now, Henry, we are almost out of time here today, but here at Equity Mates, we love a bold prediction, and reporting season is a time when there's a lot of noise, a lot of activity in the markets. So zooming out from dividends and buybacks, and just looking at reporting season as a whole, we're going to put you on the spot here. Do you have a bold prediction for this F21 reporting season that you can share with us today?
A bold prediction. I think it's going to be a pretty good reporting season, but I'm worried that it's as good as it gets. And as we go into summer and we see the virus cases around the globe sort of pick up in Northern Hemisphere winter, I think we could see some increased volatility, especially when the US market comes back from its summer holidays at Labor Day at the beginning of September. So I'd be a little bit cautious. I think we're going to see unprecedented corporate earnings, lots of generosity, it's a bit like a loyalty payment, I guess. People are stuck with a lot of these companies through thick and thin during COVID, and I think they're going to be rewarded. But the question is where we go from here, and I think we might see the market peak towards the end of this month before Christmas. So I'm not expecting great things by the end of the year, I must admit.
Love that bold prediction. Well, we'll tune in, I'm sure, many times before the end of the year, but we've got that on record. For those of you who are listening at home, Henry runs the small cap model portfolio at Marcus Today, as well as a bunch of other market commentary. So go and check that out. He also holds the mantle as the second most downloaded episode on Equity Mates for 2021. So go and check that out if you haven't already. I think we spoke about 3 sleeper stocks with upside potential from memory. So if you want more of Henry, you can find him at Equity Mates as well as Markets Today. But Henry, always a pleasure chatting. Thank you very much, and I'm sure we'll talk soon.
Thanks, guys. Pleasure always.
And that brings us to the end of today's episode. Plenty going on with reporting season here, so hopefully you'll be able to take some value from that. And if you are lucky enough to be one of the shareholders for some companies who are partaking in this Holy Trinity, then good for you.
Yes. And the AusBiz content train keeps rolling. We're back here tomorrow, same time, same place, with a Watchlist Wednesday episode. We're joined by Rob Shears, who's a new expert for Equity Mates. So excited for that. So make sure you join us then.